And I think what's going to happen is this crisis that we're about to face, that gold knows is coming, is likely to put gold and silver at new reality levels that's the new reality.
Michael Oliver just dropped a prediction that's shaking the entire metals market. Gold breaking through barriers, silver preparing for a move that could rewrite history, and momentum indicators flashing signals we've never seen before. Today, Michael Oliver, the man whose momentum models have nailed nearly every major market shift for decades, is sounding the alarm once again. Gold has broken out of a 12-year uptrend, momentum is screaming higher, and silver may be gearing up for a once-in-a-generation explosion. Oliver says the lid is coming off, that this isn't just another rally, it's the start of something massive, a revaluation moment the world isn't ready for. He warns not to be fooled by short-term dips or sudden corrections. They're just tremors before the real eruption. From Wall Street money quietly pouring into metals, to the cracks forming across global currencies, Michael Oliver reveals why gold and silver could be on the verge of rewriting the financial playbook.
I think there's a different reality we're dealing with here, just like we're dealing with a different type of stock market bubble than we've ever had before. It's not a double or a triple in price over a span of 5 years. It's 16 years of, ninefold or 19-fold in the NASDAQ from its 2009 low I'm talking about now. It's a different game. And I think the problem now is the government debt markets. Because back in 2007 to 9, as the big short guys knew beforehand, a year or two before, it ain't no good because mortgage market's going to have a crisis. Okay? Well, it did. But we're talking about government debt now. Japanese government debt, European, U.S. Treasury bonds. What's going to happen if that turns into it? What if this rally in T-bonds, and we're open to this because we've been looking for a rally in T-bonds as a counter trend move to a stock market drop. Maybe we're starting to see it. But if this rally fizzles again, this is the third rally effort in T-bonds since they puked from 2000 to 2022-23. You can draw lines sideways on the price chart of long-term T-bond futures or high yields. They stayed up there. The price stayed low. When you look at the price chart, you say, hey, that looks like a base. And it keeps trying to come up out of it, but it can't. Probably because of the fundamentals. If this rally doesn't take hold and you start to roll back over, right now T-bond futures, for example, a D's contract is 118 or something. You've been down this year, you've been down to 111 area. You don't want to go back down right now, much below 116 even. Because if you do, it's telling us that this third effort by momentum to generate a counter trend move of significance is failing. If it fails, you could take T-bonds, plunge them through those recent lows, and have a mini panic, a panic that would affect the central bank and the central government, and create what? Even further money flow into monetary metals because T-bonds aren't also an alternative this time. T-bonds were a place to be in 2000 to 2002, 2007 to 2009. If you own T-bonds, they went up, yields went down. But if it doesn't work this time, then you've got one narrow place to put it. And I think what's going to happen is this crisis that we're about to face, that gold knows is coming, is likely to put gold and silver at new reality levels that's the new reality. In other words, you're not going to go there and collapse back down to $200 gold or $1,000 gold. And that's when we need to look at some of the charts we got. I sent you some log scale of gold and silver. Yeah, this is a logarithmic scale ratio. In other words, you go back to 50 years, okay? And the chart below is 50 years of history of silver. Now, look at the gold. It's been massive upwave ratio-wise. It was an 8-fold move from the 76 low to the 1980 high, 8-fold gain. Then you went into a plateaued region for decade plus, 2 decades. Mm-hmm. Then you had another surge, also an 8-fold move from the 2001 low to the 2011 high. Again, 8 times gain from bear low to bull high. Different span in time, but the same dimension. Our bear low, last one was at 1,050 price level in the year 2015. We're only 4 times, 4-fold move If we have another eightfold move, and we certainly have the fundamentals to justify it, gold's going to be over $8,000 an ounce just to replicate the dimensions of those two prior moves.
Yeah.
But also the main point here, though, is look at it's been gaining. Big legs, range. Big leg, range. Look at the silver chart below. The other monetary metal. And by the way, silver does not move with the commodity complex. Its correlation is directly to gold. The only problem is silver will sometimes outperform gold, but overall, as you can see, it has underperformed gold in the sense that we're only just now moving up out of the 50-year range, whereas gold's done it twice. Okay, there is no range.
Yeah.
Only now on the logarithmic scale is silver now saying, "Hey, I'm out of here." Okay, well, there's a key thing here. We've been going up in silver for a couple of years, and there's one thing we've identified at MSA that everybody can look at a momentum chart or a silver price chart and say, "Oh, it's a bull trend." No big deal. We know that it's been underway for a couple of years here, especially since 2022, late 2022, when both monetary metals had a pullback. Since then, it's been up, 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 and beating the S&P during that time, by the way. But something happened in the late phase of that 1979 to 80 move, where you went vertical. And also in that bull trend that had already been going up since 2001 through 2011, something happened in the final 6 months or so of that move where suddenly silver just went vertical in a matter of a handful of months, that little part right there. And also in 79 to 80, it went vertical for the last 6 months of that move. I mean, it went, a buck here, and all of a sudden it went from like under $20 to $50 in 6 months.
Yeah.
In the case of 2010, it was in late 2010, something happened there, and we'll show that in a little while, that said, "Hey, I'm going to go vertical." We're about to have the same situation now that occurred in those two late trend phases where silver went off the page in terms of multiples. In fact, if you analyze the final 6 months or so, a final handful of months of both of those bull trends, and look at the ratio move in price, if we engage in the same way we did then, the next leg up in silver is going to carry you well over 100, or it's going to carry you, if we match the 79 final 6-month dimension move, over 200. And we're going to do it in several quarters. And there's a key factor we're looking at that will signal the onset of that. And that's the silver versus gold spread.
Okay.
Now, this goes back 5 years, and these are weekly closes of silver divided into the price of an ounce of gold expressed as a percent. So back in 2020, silver was like 0.9% of the price of gold, and it shot up to 1.5+% the price of gold. That's a big move.
Yeah.
That's like buying a stock at $83 and having it go to 155 in a matter of about 6-7 months. Okay. So the spread shot up then. Okay. But since that peak in late 2020, early 2021, where silver outperformed gold, over the subsequent years, even though both metals rose in price, silver has lagged gold's performance. And that's why this spread chart has gone down in layers.
Yeah.
And back in April, it was back under 1% again. Well, 1%, if you go back 50 years on the spread, you'll see that is a very low level. And normally, in fact, 20 of the past 50 years, silver's at least been 2% of the price of gold. That's a normal almost. Well, you can see what's happened since April. Silver's been gaining, the spread has been gaining, the top chart there, versus gold. But it's not up to the green line. And the green line is what we're watching. That level, if you take it out, and that's 1.31%. And by the way, we've done this study using monthlies and long-term momentum, but below you'll see a momentum chart of the spread, which is measuring the spread units versus a 40-week average of the spread. And unlike the spread chart, which is still moving up toward the structure, the momentum chart has already hit it.
Yeah.
And it's headed back. Right now, we're higher than that last read of that uptick you see. So a few weeks ago, we hit the breakout point stopped at it, pulled back, and we're headed toward it again. If momentum upticks much more this week than we already have, and you get up to about 1.25%, again, divide December silver into December gold, express it as a percent, that momentum breaks out. And you can bet then that shortly thereafter, that spread is going to break out. Okay, so what? This is exactly what happened to gold-silver spread in late 1979, prior to the 6-month explosion. And it happened in September, October of 2010, when silver was in the $20 range, upper 20s, and it went to 50 by April 2011. What told you that it was going to accelerate was not that it was already in an uptrend, because it already was, no big deal. The spread said, I'm going to blow my cork. And during that final 6 months, what happened? Silver and gold both exploded, but silver beat the pants off of gold because the spread broke out. We're watching the top, that green line. If you break that out over 1.31%, we expect a massive rapid surge up to at least the norm of 2%. Well, even right now, if gold just sat here at $4,000, it's $4,200 actually, do 2% of that's $80 silver, okay? But gold isn't going to sit still. And again, what if gold, as we showed on the very first chart, does another equal ratio scale bull trend move that it did in 75 to 80 and 2001 to 2011, an 8-fold move? That means gold's at 8,000 plus. Could do it fairly quickly too. If silver were 2% of that's $160 silver. And again, 2% is normal. In fact, in bull market years, 79 to 80, or in 2010 to 11, the silver gold ratio, as we measure it, percent versus percent, it was at 3.5%. And in 79 to 80 was 6%. So we could get a major explosion, not only in this spread, but it would indicate to us that the price action of silver is now going to go more vertical than you can imagine.
Michael Oliver's message is clear. The momentum is shifting, and history's next major move in gold and silver has already begun. While most investors sleepwalk through the headlines, the smart money is positioning now. If you believe this insight deserves attention, hit that like button, subscribe, and turn on the bell, because when the lid finally blows off, you'll want to be the first to know.